This Twin Petes Investing podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Petes Investing podcast. It is the 5th of August. It is 7 o'clock PM in the UK, and I'm here with my brilliant co-host, Henry Viola, here at HT Viola on X. You can find him on LinkedIn, and you can also find him on the Blue Sky app. And my name is Peter Higgins. You can find me at Conkers on X. Henry, how are you doing, sir? And how have the markets been treating you?
I am very well indeed, thank you, Peter. The markets have been very kind again for another week, so I'm feeling quite cheery on the investing front at the moment.
Very good. I suspect you and many others are too. Sun's been out to the markets, folks. We spoke about it last pod. Henry had unjinxed the market, and we'd hit a high then. And we've hit another all-time high today. Markets hit an intraday high of 9177 and a bit of a change before closing at 9142, helped by AstraZeneca, the banks, BP having a really good result today, climbed. But we need to touch on a few stocks here which have done extremely well and helped and carried the markets, and more especially the FTSE 100. Henry, I'm just going to run through here some stocks. Are you ready for this, Henry? Top 14 market capitalization stocks, the FTSE 100. I'm just going to run them for you. Okay. AstraZeneca number 1, HSBC number 2, Shell number 3, Unilever number 4, Rolls-Royce number 5, British American Tobacco number 6, Relx number 7, BP number 8, number 9, GSK PLC, Rio Tinto number 10, BAE Systems PLC number 11, National Grid number 12, number 13, Barclays PLC, number 14, London Stock Exchange. Now, interestingly enough, bar Unilever, if I've done my sums correctly, Rio Tinto and London Stock Exchange, of those top 14, all the other 11 have contributed significantly to the FTSE 100 achieving its all-time high today, right? And bizarrely, it's had a pretty poor year-to-date performance, and given the fact it's running the stock exchange, London Stock Exchange Group is actually currently down, excluding dividends, 13% year to date. Yeah. So which ones have been the contributors, Henry? Of which there have been many to get the year to date and the all-time high. One stock we've spoken about a lot, and we spoke about at the Master Investor Show. I think it's one that you were quite positive on, and I was positive on as well. Rolls-Royce, mate. It keeps, I want to use a Rolls-Royce joke, but the prestige of it just keeps going. And everyone knows it doesn't really make the cars anymore. We all know that. But on the defense side of it, Rolls-Royce, year to date, Henry, guess how much it's up?
Oh,
do you want to guess?
100%?
Just year to date, excluding dividends, 88%. Year to date. You don't have to speculate on the little small caps and the high risk stocks. Pick what the name says, Rolls-Royce. Pick a quality company. 88% year to date. Absolutely staggering. Right, what else have we got there? We have got Lloyds Banking Group, Henry. After all the debacles, all the shenanigans, all of the, yeah, we'll give you that for a small change and take over that and save the country. Year to date, excluding dividends, up 47% for a bank. If you remember correctly, when we had Phil on the program, Phil Oakley, our beloved Phil. Hello, Phil, if you're listening. He was saying, and this might be a bit of a contradiction at the moment, given we're talking about the economy. The banks will do well when the economy is sound, but bizarrely, the banks are doing well and the economy is still not sound. Yeah. We've got Natwest, excluding dividends, up 30%. Barclays up 34%, excluding dividends. HSBC, excluding dividends, up 17%. Now, one of the banks which doesn't get a lot of attention, Standard Chartered, up 39%, excluding dividends. And the one we've spoken about before that you hate, which is not a bank, BATS, British American Tobacco, up 45% year to date, excluding dividends. So you might be 50% up year to date if you're getting some dividends there, Henry. And BP of late only just gone positive year to date in the last week or so. A massive discovery in Brazil. Really good numbers today. Year to date now up 6%. I own that stock. I'm looking for the value of it to be getting towards a fiver at some stage. It just broke through £4. So yeah. There's one other stock that's up 44% that I own, excluding dividends, which I've not mentioned before. I might mention it later on in the program. I'm not going to talk about it in detail. Any of those stocks, Henry, that you own, those top 14 or any of the stocks I've mentioned for the quality of the FTSE? Any of those you own?
Well, Rio Tinto is one I've got.
I own Rio,
Stock
yeah.
Exchange is one I've got.
Yeah,
and you're right, there are some great names. The one I really, really regret, and I feel like I missed this in plain sight, was NatWest. And the reason I started looking at it was because I listened to an interview with John Lee of Trafford, who was talking about what I thought was a fantastic idea.
Sorry. Lord John Lee of Trafford.
Lord Lee of Trafford, who was talking about, the government's invested and bought a shed load of the shares, and it was a nationalised bank effectively. Well, instead of selling the shares back to the market, what you could do to try to improve financial literacy in schools is actually give small shareholdings to every school in the country. Take, say, £1,000 worth of these shares that the government's got, donate them to the local school, let the children decide what to do with the dividends that the bank then pays. So you know, on £1,000, you might maybe get £50, £60. You could donate it to charity or whatever, reinvest it, but also teach the children what these shares are. You know, why are they going up? Why are they going down? I love this as an idea. And it got me thinking, actually, as a taxpayer, I, in theory, do actually own part of this bank. Maybe I should really own part of this bank. And I looked at it and for some reason never bought the trigger. That was back 100 and something % ago.
Oh,
yeah.
Feel your pain.
And now I'm sat there going, I'm an idiot, really.
We all are. The thing for me, Henry, and I had this conversation with you on the pod a good while ago, I've always avoided the banks. I've always gone for financial services or insurance companies or whatever, but banks have always been meh. Every time most of the time they release a half-year result or a full-year result, there's like part 1, part 2, part 3, part 4. I'm going, I haven't got a Scooby-Doo what you've just said on all those 4 different parts of the RNS, so I just can't be bothered. I can't spend my whole day wading through those weeds. So just avoided them.
Yeah.
And they've outperformed most of the other stocks in the FTSE 250, FTSE 350 year to date.
Well, if you look at Lloyds, I mean, I used to own Lloyds, and I sat and it went absolutely nowhere. And I took my dividends, and eventually I got bored of it, and I moved on with my life. And that's probably coming up for 10 years ago now, maybe a bit less,
40,
but.
Yeah, up 47%.
You know, how long would I have had to have sat there to get these stellar returns? And they really are. They're fantastic year to date, but not one I've really regretted selling out of, Lloyds, if I'm honest.
Yeah, and this is the problem with some of these stocks. You have to just hang on and reinvest your dividend, buy the dips, and pray at some point they're going to turn it around, or the right management is going to come into place and turn it around. But invariably, sometimes it never happens, you know. And the bizarre thing is, the banks have done what they've done year to date, despite the absolute shod, these sort of behaviour, macro-wise. and externally what's going on regarding business and growth or lack of growth, should I say, and lack of investments going forward. So yeah, very, very interesting, mate, what's going on regarding that. So that's where we are, ladies and gents. All-time high intraday, closed at 9142. Let's see what happens for the rest of the week. Let's hope the man in orange doesn't come and bazooka the markets before the end of the summer, and we actually continue moving forward, mate. Moving forward with the markets prior to next Wednesday. We'll talk about next Wednesday later on in the markets, Henry. So, Henry, that's the markets. We're going to be talking, ladies and gents, about the FTSE 100. We're going to talk about a couple of stocks each from the FTSE 100, why we like them, what we think about them. We're going to talk about the Investor Summit, talk about MENPHYS and charity fund, the MENPHYS charity fundraise, and a few other bits and pieces going forward. I want to say a big, big thank you for the feedback we received for the pod. Lots of people wanting to talk about private equity stocks, Henry, the dividends, the discounts, and so on and so forth. So really, really appreciate all your generous feedback regarding that. I've actually taken a big chunk of change out of my holdings of APAX now, with a view to investing in another private equity company. We'll see what happens. We'll see. I'm hoping the rest of it that I've left. I've secured the 60-second takeover in 11 years regarding that trimming of APAX that I've done. I'm still hoping there's a little white knight out there that comes and says, actually, they're trying to rip you off by selling you this at 165 and come in nearer to NAV of 195 and not 194.95 and offer 170, 180 or something like that. But we will see. We will see, Henry. We will see. Right. Which stock would you like to talk about first, Henry?
Well, actually, before we dive straight into the stocks, I'm going to give just a very brief statement because somebody asked me the other day, what is the FTSE 100, would you believe?
Okay. It's education. That's what we're here to do.
And it occurred to me, we fling the term around all the time. What is the FTSE 100? So the FTSE 100 is most people listening to this will know it's a stock index. It's a basket of shares that are listed on the stock exchange. The FTSE 100 was founded in the 1980s, I want to say. And it's basically the 100 most valuable companies on the London Stock Exchange. And when we say the 100 most valuable, we mean the 100 with the biggest market capitalizations. So the total value of all of the shares is the highest on the market. And it's so named, it's the Financial Times Stock Exchange 100. It was originally founded, apparently, based on the Financial Times, the newspaper, had their own index of 30 companies. And this was based on that model, but they just expanded it slightly and decided to keep the name Financial Times, which is why the FTSE is called the FTSE, the FTSE 100. Before we dive in, but yeah, little fact I didn't know a lot about. I knew the name, but if anybody didn't know, it's the Financial Times Stock Exchange 100.
Yeah, I've got the date here. Only January the 3rd, 1984. I think some people will be shocked by the recent sort of like, is it only that old? 1984. Yeah,
very new, very new. Anyway, so we've got 100 shares on that index that are the most valuable in the country, according to the market. And the first one of these I want to talk about is one that you may have heard of. It is Ashtead Group.
Okie dokie.
It's a UK-based equipment rental company founded the same year that the FTSE was launched, 1984. And they primarily do business in the US under the brand Sunbelt Rentals, with a small presence in Canada and also in the UK. They've got 1,200 stores in the US, turning over about $15 billion. And they are focused on tools, effectively, specialist tool lending and tool sales. They rent out equipment for construction, infrastructure, events, film and TV, disaster recovery, all kinds of interesting things. Now, the reason that I wanted to mention it is because I think they are a beneficiary of the US infrastructure boom. You know, Biden might be gone from the presidency, but he did get the CHIPS Act into law. He got the Inflation Reduction Act into law. There's huge spending on roads and bridges, all of which will require tools for the workmen to use.
Yeah.
There's also a bit of a trend in the construction sector away from ownership and towards the rental and leasing of tools, because they're very expensive. And they're also quite hard to keep secure. If you've got a white van parked on the road, it's an easy target for thieves. Far better to rent it from someone like Ashtead. And if it gets nicked or damaged or whatever, then, you know, they bear the cost of that. They've got a long history of double-digit earnings growth and great capital discipline. You know, their returns on capital have been consistently above 15%. And their free cash flow margins are industry leading, in my opinion. They've compounded at a compound annual growth rate of about 20% over the last 10 years. They've been one of the FTSE's top performers. And I think in a world where everybody's going, oh my gosh, Donald Trump tariffs, you could potentially snap up a bargain on this one. It's a rare UK company that's effectively a US style compounder. So interesting business, one people might want to go away and have a look at.
It's one of those stocks, Henry, which I am guilty of always going, I'll wait for it to get cheaper. And it's rarely ever been cheap since what, 2020. It's probably the best chance you had. And even then they did reasonably well. So look at the last 3 year charts, Henry. There's been very few opportunities in the last 3 to 5 years of getting that cheap. I've just pulled up the data here. You said it started when the FTSE started. It's probably, if you go back to 1984 and put any stocks that were around and still constituents of the FTSE 100, the best performing one could be. So people go and have a little look and come back and say, Pete, no, this one is the strongest stock since 1984, January 1984. It's up 16,701%. 16,000. Who wouldn't want a piece of that?
Exactly.
Yeah? It's had its difficulties, but it's done exceptionally well. Year to date, we were talking about year to date performances earlier. Pretty flat, Henry. It's done nothing year to date. It's sort of a little shallow period in April. I think it was impacted in April because of the tariff talk, and year to date the tariff talk, it's just barely broke above positivity year to date. So that might be an opportunity. Sub 50 quid. Last 3 years, last 5 years, the share's up 90%. So it's not a bad performer. If this tariff stuff doesn't kick in, it's a possibility there. Last quarterly update, revenues year to date were down 3.7% for the Q4 revenue. Did beat earnings by 6.99%. So yeah, there's opportunity there. It's a quality stock, Henry. Market cap 21.2 billion. Yeah, I've got quite a lot of FTSE 100 companies now. I've been twirling away buying them quietly whilst it will come on offer. I'm looking at the lows here, 2025 lows, and then the lows of 2022, just sub £40. So if I was to put that on my watch list, which is not on my watch list at the moment, not that I wish them any ill, but I'd be saying, I wonder if I can get that for 45 quid, or if I really get them really cheap at sub 40. I'm not sure that's going to happen now.
Well, in the last 4 years, you've only had 3 opportunities to get it under 40, and 2 of those were in 2022.
Yeah. So so I'm not sure I'm going to get that chance. And year to date, yeah, April was the last time when all the tariff concerns were kicking off. Quality company, Henry, and like you say, it's getting a lot of its revenue overseas. Yeah. So yeah, let's hope it stays independent because it's done well. And the fact it was listed, when the FTSE 100 started, is a really good a good sign of the quality of what those management and the various different management teams have done over the past, what would be what we're looking at now, 41 years now. Is that right?
Yep.
I've got my maths right. 41 years. Yeah. So yeah, nice compounder. 41 years. Put that, scroll that away for 41 years. Bingo. Don't need to go and work for anybody anymore.
This is a quick hello to you, our valued Twin Petes Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
Good call on that one, Henry. I'm going to talk about a stock now, which come out with some results today. And I don't ordinarily do this, but I want to make people aware of this one. I do own it, so that there is, if you want to say, some bias towards it. I have held it for a little while, and this again goes back to the patience and psychology argument. It's one of those stocks which has been a perennial takeover talked about stock. I suspect, given the news today, that it could well become a takeover target again now, which is why I'm bringing it up. But it was stuck in a range of 52-week range of £9.11 through to £12.13, and today it closed up 15% at £13.31, which is now its highest close since November 2021. Which one am I talking about, Henry? Which stock? Yeah, you don't know?
Go on. Surprise me.
Smith and Nephew.
Oh,
Smith and Nephew, mate. Perennial target. Is a leading British multinational. Look up the stats on this one, Henry, and I'll try and pull up the little bits and pieces I've got regarding
I'm excited on this.
Let me just see if I can pull some stuff up here. What have I got here? Have I got it? Did I put it in here? Yes, I did. Right, and I'll put the metrics up in a minute. So most people know about it. I'll give you a little brief overview. It's a leading British national medical technology company specialising in advanced wound management, orthopedics, sports medicine, with a rich history going back to 1856, Henry. That's how old it is. Yeah. Headquartered in Watford, England, develops, manufactures and markets medical devices focused on the repair, regeneration and replacement of soft and hard tissues. You heard that bit in the middle there, medical technology now, Henry. So they're using a lot of robotics to go in there and sort out hip surgery, all the rest of it. When you see these massive sort of operations where people are getting essentially, I want to say this tentatively, screws and pockets being put in and sorting out legs and hips and all the rest of it. It's now tech stuff, tech operated. Yeah. Not just doctors hoping not to shake as they go into your body. So core business, Henry, primarily in 3 market segments: advanced wound management, orthopedics, sports medicine, global presence, operates and marketed and sold in over 100 countries, mate. Company maintains major manufacturing and R&D facilities in locations in Memphis, Tennessee. I'll even try and pronounce the other bit. China and UK headquarters. And basically it moved its headquarters from Hull to a new advanced facility just up the road, so some biased here, Henry, in Melton Mowbray in Leicestershire, as part of an £80 million modernisation. And as of 2025, the CEO, Dr. Deepak Nath, served as CEO with Rupert Soames, famous Rupert Soames. That name should resonate with you as chairman. And since then, it's all been about focusing on innovation and sustainable growth. So that's why I'm talking about that one, Henry. And today reported robust growth and profitability in the first half of 2025, underscored by strong revenue increases, margin expansion, significant free cash flow generation. So what happened? Revenue growth reached $2.96 billion, Henry. A 5% increase in underlying growth, despite some FX issues and headwinds, and profit improved by 0.6% to $429 million, 30% operating profit increase. So that's why the market's jumped all over it this morning and started buying it up. Cash generation, which you like as well, and capital returns, cash flow performance and free cash flow increased up by 39 million to 244 million year to date. And they plan a 500 million share buyback as well. So that could help with the share price carrying on going forward. So up 15%, smashed it out of the park today. Everybody wants to buy it now at £13 plus, heading towards 14, heading towards 15. If Striker come back or get interested because they're what size are they again? Let me just check the size of Striker, Henry. That's the biggest
it's only,
sort of
Nephew's
US
11.6 billion.
$147 billion or something like that, if I remember rightly.
145.8 billion.
$145 billion. If they come back, they can pick it up for £20 a share and still only be paying 15 to 17 billion pounds for what is a currently just over 10 billion market cap FTSE 100 stock. I own it. That's all I'm saying about it. What do you think? Any thoughts about it?
I really, really like that. I really, really like that. That is one that I've looked at previously and gone, I like the company, but I'm not sure where the bottom is. And I'm looking at the price graph right now.
I've been hoping that as well. I've been thinking that as well.
Well, it's gone from 10 to 15 to 12. It's kept falling down to 10. Then it's dripped under 10. To be honest, I'm looking at this and going, you know what? I wish I'd set a price alert at 10 quid and just taken little nibbles under £10 and kept doing that, because it's now back up at what's the price today? 13.5.
13, 13 and change.
You'd be
13,
sitting 31. On quite a nice, and you'd have got a nice yield as well. I mean, it's paying 2.3% here. So what would that be? 3.5%, 4%. Yeah.
So ladies and gents, when Henry said about nibbling in, the pound cost averaging side of it, you could have said, you know what, each time it drops below a tenner, I want to buy it. You could have just left that on your account and bought £1,000 worth of shares, £2,000 worth of shares, 5, 10, whatever. Or you could have said, regardless of what's going on with it, I'm going to ask my platform to purchase £1,000 worth of shares per month or £500 of shares per month until you got to the full allocation that you wanted. So you'd have been buying it sub £10, £10, £11, £12 today, depending on what you set up, whether you put it to purchase first of each month, Henry, is that what you normally do and that sort of thing?
Yeah.
Or the end of the month. And then once you've reached your allocation of £3,000 or £5,000, the platform will then stop buying. You've got your allocations of stock. You then look at your average. And if you'd started at sub 10, your average would be sub the close of what it is today, 13.31. You might be at £11.5. You're still up, nearly 20%, averaging over the last 12 months on that stock. So what we got, Henry, a market cap of 11.6 billion, forward PE, forecast PE of 18.2, a PEG of 1.4. What we got, a little bit of debt there, Henry, to market cap of 21.4 versus the 3-year average of 24%. So not too bad there. Forecast growth coming up. Dividends.
I don't know. The net borrowing's only 2.7 billion, and that's on. I mean, what's that on income of? 2.7 against 5.8 billion in revenue. So it looks very manageable.
Yeah, it's manageable, and that the good sign about it being manageable is the fact that they've continued to pay dividends for 33 years.
Yeah.
So that's one to keep an eye on, ladies and gents, and we'll see. The bottom is in. Today they're all going, oh no, I know, and a couple of bears were in that stock as well, Henry. Yeah, so shorters squeezing it, and then they've got smashed today. So we'll see. But yeah, I own that stock, so be careful, people. You know what I'm like for telling you about quality stocks. They tend to get impaled. What's your second one, Henry?
So next up, really interesting business, this. It's sort of a bit of a quiet compounder, in my opinion. It's a global
Right.
provider of analytics and decision-making tools for professionals across a whole range of industries. The ticker is REL. It's Relx.
Right.
They serve sectors such as science and medical research, risk management, the legal sector, and they organise a whole swathe of different digital and face-to-face events, industry trade shows, that sort of thing. About 60%, again, about 60% of their revenue is generated in North America. Cue panic, oh my God, Donald Trump's going to end the world. And about 20% in Europe. Cue even more panic because Europe's going to go bankrupt. But this has been a really, really good performer for a long time. 80% of their revenue is recurring. It's from subscription-based customers. They've got great pricing power, monopolies in a lot of sectors, great cash conversion, 20% return on capital employed. They've got over 10 years of growth in earnings and dividends. And they play into lots of trends I really like, AI, machine learning, risk modeling, the legal sector, research tools. I think this is a really quality business. I think it's the UK's answer to Moody's or who's the one that does all the indexes? MSCI. I think this is a great business, and you've got people all over the world leaping at each other to buy MSCI, and yet Relx is a bit of an overlooked gem, in my opinion.
This is one of the faults or the good things about being unscripted and not communicating with each other, which stocks we're going to talk about before we come on the show.
Oh no,
I don't like it particularly when Henry talks about a stock I've only just recently bought, but this is what he's just done with Relx, and I've only just bought it, so I'm not happy. I've been looking at this forever, ever, and I just relented recently on this and just purchased it because it was sitting there all year, almost in negative territory year to date, and I've gone, something not quite right here. It's essentially a tech company. It's a legal tech company. It gets involved in all sorts. Lots of the Americans love what Relx do, which is why most of its revenue comes from overseas and the US. And I've been going, no, I'm not going to buy it. It's too expensive. I'm not going to buy it. It's too expensive. And I think it was Charlie Huggins who I had a conversation with about 2 years ago from Wealth Club. And he spoke to me about it. And he said, Pete, he said, stop, just buy the thing. Because it's one of the best companies that we've got. And I think when he spoke to me about that, and I had the conversation with him about why I love the company, I think it was sub 30 quid, right? So I've watched it since then, just carry on and carry on and carry on and carry
it's
on.
up at £38 now.
I know, Henry, I know. And it's carried on higher and went above £38. So it's just come back a little bit of late. And I thought, I'm not going to wait another 3 years. And when it hits 50 quid, me still sitting at it going, I'm over here. Can you come back and, help me out? So I've just recently bought it because of all of the tech aspects that it's involved in, the legal tech side of it. And I'm just wondering what's going on because I'm wondering where I've missed something as to why it's drifted. I spent an enormous number of hours researching it. And I thought, I just can't find out what's the reason why it's drifting.
It is up year to date, but this is in a year when Donald Trump is determined to destroy the international trade order, and a significant amount of their revenue comes from the US. And as far as Donald Trump's concerned, if you want to do business in America, you should be listed in America and you should employ American staff, and that's the beginning, the middle, and the end of the conversation. And I think it is making the world nervous. And, what I would say to people is that Donald Trump's not going to be there forever. He's not entirely wrong about, globalization doing a lot of damage to national economies. If a serious war kicked off with us and China, let's say, we can't exactly turn around to the Chinese and go, oh, well, I know we're at war, but would you mind supplying us with military grade steel so we can build our own ships, please? That's not going to end well. But
no,
that aside, trying to rebalance national economies, I think it puts you in a very vulnerable position when you export or when you rely on the imports of certain sectors entirely from other countries. But Donald Trump is not going to be around forever, and the what word shall I use? The interesting way in which he has applied tariffs and trade deals will change. And when it does, these companies will still be the great companies that they are today. So, don't be frightened by the noise today and miss what could be a bargain right in front of you, is what I would say.
Sorry, folks, if you can't see me, if you need to go on YouTube, I'm just trying not to laugh out loud because of the polite nature of which Henry had words coming out of his mouth and he reframed it as it was coming out. Unique politeness there, Henry. Love that, sir. Thank you very much. Yeah. So yeah, things will change, but we might get, someone else even worse.
We're in for an interesting time, I think.
Yeah, the next 10 years are going to be very, very interesting indeed, mate. Right, Henry, we're going to have a break at this point now, mate. I think I'm going to switch up a little bit, and contrary to what I said to you before, we're going to quickly mention MENPHYS and the fundraise, and then we're going to talk about what Henry was trying to do was trying to catch up with the TwinPetesInvesting Challenge winners. Henry's crunched the numbers. So after I've just made this little brief comment about MENPHYS, we're going to announce another batch of 3 TwinPetesInvesting Challenge winners. You need to get in touch with Henry and I when we tell you what the names are for the winners. And you'll be up for a month subscription to ShareScope and also a Harriman House book. You'll find a list of the books that I've put out back in, forget what month it was, on X, and I'll probably put that out with one of the posts as well regarding the books to choose from, select from, should I say. So, Henry, MENPHYS charity, Just Giving page, brilliant. We've had 2 fantastic individuals who have added to the other fantastic individuals that have donated thus far. And the last person to make a donation was N20, I think it's N20 Investor on X, an individual that has been supporting the pod for some time, commenting, mentioning, retweeting, posting. So we appreciate your support and additional support here by making a kind donation to support disabled children of that are supported by MENPHYS. So N20 wrote, "Good luck. I have a disabled son, and charities like these give our children opportunities they would never have otherwise. Thank you!" ! Great podcast as well. Donated £30 plus £7.50 gift aid. So N2, thank you ever so much, sir. I'm hoping that at some point we'll get to meet you, and if you can bring your son as well to one of our events, we'd love to be able to celebrate the amazing life and support that you've been providing him with, and all the family you've been supporting him with. And if you're ever near Leicestershire, mate, and you want to give me a shout, I'll be happy to take you and your son down to MENPHYS and show them you both all the different supports that we do, and you can have a fab day just chilling out with us. The latest thing we're doing at the front of MENPHYS, and you've been there, haven't you? Putting together a little garden so the young people can embrace planting stuff, growing stuff, seeing it grow, and also chilling out. Get a little nice kind of, non-alcoholic pop or a cordial, sit out there in the sun, watching their garden grow. So that's another thing we're doing as well at MENPHYS. So thank you, N20. And then we've got Simon the Baker. I am positive that Simon the Baker, if you're listening, right, you are the baker that I spoke to at Mellow Derby, and you're based in Loo in Cornwall. And I was literally driving past Loo, not the Loo, folks, no jokes, please. Driving past Loo in Cornwall when I was in, I can never pronounce it right, Fowey? Is it Fowey or Fowey? In Cornwall, that's where I was staying. And I thought, I need to go to the place called Loo to go and find out if this baker is around, if Simon's around, because he made a massive donation to us last year, if you remember rightly, and I wanted to thank him for that. And I sent out investigators to say, which is the baker, but I can't. So please get in touch with me is what I'm trying to say. Please get in touch with me because I want to thank you personally and face to face. And if you're coming to the Investor Summit next Wednesday on the 13th, please come and say hello to Henry and I. So Simon 9 days ago said, great work, guys. Looking forward to catching up with you again in the future. Love the podcasts week in, week out. Thank you. And once again, he dropped the change, £100 plus £25 gift aid. So absolutely fantastic, Simon. Thank you ever so much. Our total is 2,244. We're not halfway yet, and we're in August. So we need everyone that's had a listen to just donate £2, £5, £10, whatever it is that you can afford to donate to get us near that £5,000 target so we can support some young people into employment, ensure that they've got all the skills to become independent in employment, which is what we're trying to do, is to get them all skilled up for jobs going forward. What do you think of that, mate? N20 and Simon dropping the change.
Spot on, Pete. I mean, thank you ever so much, chaps, for your donations. You know, and as many of you know that are listening today, Pete and I, we genuinely are passionate about giving back. And I do believe MENPHYS is quite a remarkable charity. They do everything from inclusive sports sessions to offering respite care, and they do it so quietly. They don't, you know, these guys aren't on the national news. They're not on the front page of the papers every day, but they've got huge impact on families and disabled young people. And you know, as investors, me and Pete, we talk about long-term thinking a lot. And I think MENPHYS really embodies that. It supports families, not just for a moment, not just for a day, but for a lifetime. And the money we're trying to raise through Just Giving, it will enable them to continue their work. And we're asking all of you to help support us, to support them. Whether it's a few pounds or whether it's a more generous gift, every donation makes a real difference. And I know we've asked before, and I know times are challenging, but if you've ever taken value from this podcast, from our work, from our time, please consider paying it forward. You know, you can visit the Just Giving page. It just takes a moment, but the impact will genuinely last for a lifetime. So let's show MENPHYS and all those kids and families that rely on it just what this community of investors can do when we come together.
Absolutely. Very, very well said. Thank you for that, Henry. www.justgiving.com/page Peter Higgins. And that is for the MENPHYS page, not for me. It's for the disabled children of Leicester and Leicestershire and Rutland. So if you can, please make a donation. All your portfolios are doing absolutely smashed it year to date so far. Small donation somewhere, you know, price of a coffee at Starbucks, if you can. Right, Henry, I'm going to leave my last controversial FTSE 100 stock till the end, right? I know how you love my random stocks and random walks. Shall we talk about the three winners, reverse order?
3 winners
for the TwinPetesInvesting Challenge for, where are we? April, May, and June, please, sir.
Exactly. Well, first off, I would just like to say again, congratulations to our 3 winners from January, February, March. Chef Traded 2, Jam for You, and Smudge Dan. Please do get in touch. Say hello. Let us know when you get your prizes. Very much appreciated. Moving on to the month of April for the TwinPetesInvesting Challenge competition. In third place, April was a very, very closely run month, I should start off by saying. There is only a 0.1% between each of these. A 0.1%. Yeah.
Wow.
And I double-checked the numbers. So,
wow.
In third place with a 12.5% return is our friend Ben. Go left, Massa.
Go left, Massa. Go left, Benner. Go on, Ben. Well done.
In second place with a 12.6% return is Nathan R99. And in first place with a 12.7% return for the month is a ticker I've
Wow.
not come across before. At EBY5ING, with a portfolio that included HVivo, Gulf Marine Services, Active Ops, International Workplace Group, and Tribal Group. An eclectic mix there, but very well done. EBY5ING. Please do get in touch. I know Peter's not read out the full list of books on the air, but we do have those typed up for you, and we will be able to get your prize posted to you.
Henry, when you said it was close, I didn't think you were going to say. I thought you're between third and second, but the whole cohort of top three, was literally 0.2% separating them.
Yep.
Don't think I've ever seen that. 12.5,
No.
12.6, 12.7. Never seen that.
How
before.
long have we been running this competition for? I've never seen that before.
Wowzer.
So,
Wowzer.
very, very well done, chaps. Very well done.
Well, and commiserations to Nathan and Ben for coming so close. It's like a 100-meter sprint, dipping for the line, and one person got it and one person didn't. Oh, gosh.
So,
well done. Well done, Evie.
In the month of May, in third place, we have a more normal spread this time. In third place, with an 18.8% return, we have
that's good.
At one James 1 and 1.
Yeah, James. We know James. Well done, James.
In second place, with a 20.6% return, we have again at Nathan R99. Close but no biscuit, 2 months running.
Tell us about some of the stocks in his portfolio that helped him in April and in May, please, Henry, if you've got those names there available. Please.
So we've got Wood Group, we've got ITV, we've got Invinity Energy Systems, Oxford Nanopore Technologies, and ITM Power.
Yeah, ITM Power would have helped during that time.
All of which would probably give me a nervous breakdown if I held them, but...
Okay, Nathan's going to be close. He's doing well. He's doing well, mate. So he just needs a bit of help there. Close twice. Right. Don't tell me you got beat by 1% again for first place.
No,
please.
This time with a 24.5% return. We have D. Suarez with a portfolio that included Afentra, Jadestone Energy, Petrotal, Mila Resources, and Thor Explorations. So lots and lots of commodities plays in there. Again, these are names that would genuinely, if I was packed to the gills with names like this in my own portfolio, I would be terrified most days. I'd be glued to my brokerage account going, oh my gosh, I'm rich, I'm bankrupt, I'm rich, I'm bankrupt.
Which is why some people that are trading literally are going, and they're doing, 10 to 20 to 30 trades in the first 2 hours of trading.
Yeah.
Okie doke. Well, congratulations, D. Suarez, on that one. Well done.
And in the third month, the month of June, the halfway mark, in third place with a 21.4% return, yet again, would you believe, we have at Nathan R99.
Gosh.
Top 3 months running. That is a first. I don't think I've ever seen that.
Well, he's up for winning the old comp at this rate. Carry on.
So very well done. In second place with a 30% return, 30, we have Blue Pill 979 with a portfolio that included AFC Energy, Atlantic Lithium, CAP XX, Gene Drive, and Technology Minerals.
Fancy only managing second with 30%. That's unfair, mate. That is uncalled for.
Well, when I tell you what first place got,
you're going to say something ridiculous.
When I tell you what
like
first place got,
go on.
It's even bigger than 40%.
Have you done your calcs right, mate? Am I going to have to do the maths myself?
43.7% return.
Wow.
At Smudge Dan.
Smudge Dan again.
With a portfolio that included Andrada Mining, Westminster Group, Arrow Explorations, Tiger Royalties, and Thor Explorations.
Well, that's a second win for Smudge Dan. June smashed it. Wowza. Amazing.
So
42%
we
in a
have
month.
got some very, very strong performers this year. Last year, I remember doing
Wow.
this, and every month we were getting very different top threes for the most part. I remember
Yeah,
Smudge Dan being a strong performer.
yeah,
But we've got some outstanding performers this year.
that is ridiculous. Top three, 21%, 30%, and 43% and change from Smudge down. They're very small cap companies, but if you pick the right small cap companies, like you say, you can do extremely well if you can, you can deal with the volatility. That is extraordinary month's performance there for June.
Yep,
Staggering,
astonishing stuff.
staggering. So Smudge down, start building your bookcase, fella. Oh dear. I've had some conversation with Smudge Dan, and we'll be able to meet him hopefully in person at the Investor Summit because he is intending to attend. So we're
I
hoping
do
we can
hope so. And if he does, I'm going to be there with my notebook going, right, mate. What do I need to buy?
You'll have to remember, Em, when we do the live pod, to ask him do we have Smudge Dan in the audience?
Yeah.
Any tips that we could have, sort of thing. We'll have to make sure we find him and get a picky with him as well. Unless he wants to stay anonymous.
If he wants to stay anonymous,
No.
that is always true.
Yeah. Ladies and gents, and all those that are involved in the comp, the beauty of the way that I've set this up is that anybody can win from 1 month to the next. And this is the, I mean, we've seen some consistent names, but it starts again at the beginning of August. It starts again at the beginning of September. It is about the performance for that month. And then when we get all the way to the end of December, we then choose the winner of the month of December and also the overall winner, top numbers, runner up, and the third place person. And we're trying to put prizes together for all those top three, including the winner of the month. The winner of December may not be the winner of the whole competition and may not even be in the top three. So we're trying to just mix it up and make sure as many people that support and listen to the pod get the opportunity to win a prize, which is the book or a month subscription to ShareScope, or overall a whole bundle of books and a 1-year subscription to ShareScope, and Investors Chronicle subscription for a whole year.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Petes Investing podcast listener, you can access an exceptional offer, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Petes offer is available to new subscribers only, and you can subscribe using the promo code TwinPetes. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
Henry, something again, congratulations to all those people in the Twin Peaks Challenge. The remarkable selection of stocks, fantastic performance. I'm not even going to ask Henry where I am halfway at the moment because I know I'm nowhere absolutely near it. Although Henry's smiling there, so it means that I'm near rock bottom. And even worse than what he mentioned.
Oh, you are
he's like,
no, you're in the top third.
I'm at top third. Yeah, I know what third rhymes with.
No,
anyway.
The reason I'm smiling is because I'm still sitting ahead of you.
Significantly ahead of me, no doubt. Yeah. I appreciate your candor of not embarrassing me with saying you're in the top third. Yeah.
On a fictional competition, it's nice to beat my mentor. So,
sorry, who's your mentor? How's he doing?
Yeah.
It can't be me. Right, Henry, we had a conversation at the beginning of the pod, which you said you wanted to talk about. We can talk about that now or near the end. I want to talk about one more stock, but I think the reason why you were saying you wanted to share it was because of the volatility of the markets, the nature of speaking about stocks, which we invariably talk about a lot here, about errors on our part regarding selection of stocks, but also where management have failed. They've said one thing, they're doing the complete opposite, and invariably the individuals that pay the price of mismanagement of a stock or a company is us, the shareholders. And in that regard, I'm not going to spend too much time on it. I'm not going to say a lot. All I'm going to say is the headlines today was of Neil Woodford being charged by the FCA. Go and read the details of it. I think there's a £46 million fine or something or other, and a ban or suggested ban. Go and have a look at that and what's being said. I know a lot of people who have been impacted by that. I was speaking to somebody today who knew of somebody who had the bulk of their pension in the original fund that Neil Woodford impaled people on, and just got so stressed about it, sold a whole lot and lost an absolute fortune. So the impact was severe for a lot of people, and the redress hasn't been fully addressed yet for some of those, if ever. But there was some news today, so go and read that. I'm not going to talk about Neil Woodford too much. But Henry, another example I hear again of mismanagement regarding stocks. You want to just share a little bit about that?
Yeah, I mean, I had some bizarre news today. So readers of my blog and followers on Twitter will know that I picked up a couple of new businesses as the ISA year started, and one of these was a little company that produces lift components. It's called Dewhurst. The ticker's DWHT. And there are also A shares, DWHA. Now, the A shares are non-voting, and the shares I bought, which were DWHT, are voting shares, pay a slightly lower dividend. Now, the business was small. It's a £50 million market cap company, but it does a real thing. It produces lift components. It's got a majority family run ownership. The family own about 50% of the shares directly. They're listed shareholders. And it's very conservatively run, very little debt. Earnings per share tick up every year. The share count ticks down every year. Revenue goes up every year. You know, it had got a lot of good characteristics I like to see in businesses. And I opened a very small position back in April. It was about a 1% holding, just dipped my toe in. And sure enough, over the next 3 months or so, the share price had been drifting down and continued to drift down until I was sat on about a 30% loss on my 1% holding. And I'm thinking, to be honest, this is kind of looking like a candidate for a top-up, because the metrics are all going in the right direction, but the share price is going in the other direction. And then only last night I was hovering over the decision-making button, shall we say, and thought, I'll leave it another couple of months. Woke up this morning to find that the management team have decided to delist the company. They are paying a 14% premium on the non-voting shares and a 30% premium, a 30% premium on the non-voting shares and a 14% premium on the voting. And I'll be taken out underwater. They've not guaranteed to buy all of the shares on the market. They've only guaranteed, I think it's 80% of the non-voting and 40% of the voting shares. So what would effectively happen if you were to wait and accept the tender offer from the management team? You get a premium, guaranteed premium for, let's say, 40% of your shares in my case. The other 60%, they're just going to delist. You will then own a non-listed company or part of a non-listed company. There is no guarantee they will ever relist. There is no guarantee they will ever buy the shares back. There is no guarantee that there will be any kind of price matching facility whatsoever. But because the family have got a majority of the shares, they can more or less force this one through. And so I looked at this and went, well, I'm going to be out well underwater. I bought in at £10 and something, and they're currently down at £8 or some £8, £6, something like that, £6.60. And I'm just going to take the loss and move on with my life, because frankly, I do not want an unlisted lift maintenance business in I couldn't even call it a portfolio, but in the back of the safe.
it's a difficult one, Henry. I've seen a few individuals, including a former fund manager, who owns this stock and is also scratching their heads, going, "What's going on here?" The whole point of investing occasionally or seeking out family-run or large shareholder-based family holdings within the company is that it's entrusted by the family. The family are going to be looking after the shareholders who are part of their larger family. And this doesn't look like this is the case on this occasion.
The family's
And
looked after the family, and damn the
the
rest of
family
us.
have looked after. Yeah, I mean, when we were speaking before, you were saying that back in, what was the date? 2020 or maybe earlier, it was £26 per share.
Yeah,
The start of this year, it's £12.50.
yeah,
So why was it just creeping down, creeping down? Was there negativity on news flow or what? But then to go all the way from year to date, £12 towards £6, to then go, oh, we'll take it all out for £9. The assets are still there.
yeah,
Yeah. So this is almost, it feels like a little bit of a take under for me, Henry. And the fact they're not saying, if you're taking it private, take it private, right? We're going to
yeah,
take this private at £9, whatever the price is. Don't say we're going to take 0 point whatever it is per share at that price and the rest
yeah,
are private. Sorry, what? If you're taking it private, take all of it.
yeah. I honestly don't know whether the motion will pass or not, but I don't really care at this point. Just the fact they want to do it. I don't want to be in business with people that treat me like that as a shareholder. Sorry.
And I suspect there's institutions going like that, saying exactly the same thing as well.
Yeah,
And the point is that they come onto the stock market, FTSE AIM, to be supported financially by shareholders who have done so for X amount of years. I'm not sure when they're listed. You might be able to pull that up. But you've been supported by the stock exchange, you've been supported by shareholders for X amount of years as a family. If you want to exit, you've had enough of the maybe the cost of running and staying on the market, which is £500,000 a year maybe, and you find that, 500k to £1 million excessive for what you're running as a small £50 million company a year, then fine, take the whole lot private, let everyone exit at a reasonable price, and if the reasonable price is £9 odd compared to what it was at £6, say whatever premium it was, then fine. But don't say you can have half at this price and half not at this price, because I can't liquidate it. Where are you going to list the other half of the shares that you're not giving me right now? How do I trade it? At what price will it be valued? If the professionals and the fund managers don't have any answers to that, I'm not sure it'll pass, Henry. And I think there'll be some people going, we need to go to the HQ and have an AGM or an EGM,
yeah.
to speak about this, because motions can't be carried if it's that vague and lacking of transparency.
I am underwhelmed, is what I would say.
Yeah.
And to be honest, I suspect there are some people that have gone piling into that, thinking little small £50 million micro cap.
Yeah.
Oh, this'll skyrocket. I just need to give it time. And actually, I imagine there's some people now running for the exits. I've got a holding that is pocket change, literal pocket change, going. It's fine. I can take a chin on that. It's an
And sometimes
expensive meal.
you've got to do that. When it's 1% position, it's lost 20%, 30%. You're getting the opportunity to have a look see.
0.3 of my portfolio.
Yeah. Happens to the best of us, mate.
So, yeah. But I imagine there are some people that have gone piling into that. I mean, if you look at the top shareholders, so you've got family member, somebody called Ingmar Scott, who owns 10%, 331,000 shares. You've got another family member. Then you've got B. Bruce, J. Henry Ridley. I don't know who these people are. They're not down as employees. Maybe they're old directors. Then you've got interactive investors, so that's nominee accounts. And then you've got director, CEO, director. So the majority of the shares are owned by either family or board.
Yeah.
But certainly, if I was Mr. Scott, Mr. Bruce, or Mr. Ridley, I'd be going, just hold on a second. What are you trying to do to me here?
Yeah, I mean, that's a shame. If it's over 50.1%, you know what I mean? They only need a little bit, family-wise, to get the whole motion just squidged.
Yeah.
And who's going to be able to get a 75% vote to stop them, doing that action? It's going to be hard, Henry.
Yeah.
It's going to be hard. But the blessing is, if and when they do exit the market, they can't abuse any more shareholders that have gone, I'm done.
Yeah.
And they'll have to find financial support outside of the stock exchange and the stock market.
Yeah. Leave them to it. I mean, if it was up to me, and I don't know if anybody listening can advise on this one, but I can't see any harm in the FTSE, for example, or AIM, having it be a legal requirement that if you are listed and you want to delist yourself, not a takeover, that you have to tender for all the shares. How you choose to do that is up to you, but you must, because you've taken people's money, you've taken pension funds' money, you've taken fund managers' money, you've taken my money, and then you just want to walk away with it and give me an unlisted asset that I can't. Sorry, hang on a minute. This is fundamentally changing the nature of our relationship.
Yeah, definitely want to be discussing at the Investor Summit, Henry. Definitely. Right. Sorry about that, Henry. Sorry about to experience that.
It happens to the best of us.
It happens to the best of us. We keep getting chinned. This is the nature of the podcast, guys. Ladies and gents, Henry and I invariably on every podcast sharing another experience where we're going, wow. Every day is a school day for us. Unlike you see on various platforms where everyone wins, we don't. Henry and I don't, that's for certain. Right, Henry. I'm going to share a little stock with you. Not a little. It's in the FTSE 100. I don't see it talked about that often. And then we're going to close with a little bit on the Investor Summit. Right, Henry. What do you know of Airtel Africa?
Oh, AAL. Yes, come on.
No,
this is a good
AAF.
One.
AAF.
Oh, AAF. Sorry. Yes, you are correct. Yes, shoot. Go on. I know one of our audience used to own this. Might still do. So.
Okay. I'm just going to give you an overview and the schematics, and then we're going to dash towards the stats because I'm conscious we've already done the now already. Let me just pull up my stats here, Henry. I'll get my stats up. Have I got the right? Yeah, I've got my stats here. Right. So we have got a stock here that doesn't get talked about that often, folks, right? And where did I put the stats? Oh, pulled it off somewhere else. Anyway, I'm going to guesstimate it because I think I wrote it out somewhere else. This company's stock is up 80% plus year to date, off the top of my head. Written it down somewhere else.
82.4.
82.4. Thank you, Henry. 7.6 market cap company. The 52 range is 93 pence to £2.09. It's currently sitting at the top of the range, near the top of the range at £2.07. Who is it? What does it do? Why doesn't anyone talk about it? Why does everyone talk about Vodafone and BT, but not Airtel Africa? Maybe because it's got Africa in the name. And our bias is, it can't be any good because it's doing stuff in Africa. Anyway, it's a 7.6 billion market cap company, folks, and it's up 82% year to date. Do I own it? No. Does Henry own it? No, he's shaking his head. Airtel Africa is a leading British telecommunications company providing mobile voice, data, mobile money services across 14 African countries with a strong focus on digital and financial inclusion. Airtel Africa is headquartered in, guess where, Henry?
Go on, shoot.
London, United Kingdom. Operates, as I've just said, in 14 countries, primarily East and Central Africa, East, Central and West Africa, Nigeria, Kenya, Uganda, Tanzania, Rwanda, and others. It has a subsidiary of India telecoms giant Bharti Airtel. Now, if I'd seen this 4 or 5 years ago, Bharti Airtel, huge. Yeah, a subsidiary of the huge Bharti Airtel. You're going, that's why they've got the infrastructure. That's why they're making monies. That's why they're doing so well. And they hold a majority stake in the company. The company, listen to this now, Henry. This is going to get you sitting up going, why I've not looked at this company before. The company serves a population base of around 635 million people and is one of Africa's largest mobile network operators by customer base with over 166 million subscribers as of this year. Is that maddening or what? Yeah.
Wonderful.
Right. So range of services, Henry. Mobile services, prepaid and postpaid, wireless, voice, international roaming, and fixed line telephony. Mobile services, 2G, 3G, 4G, and expanding 5G networks, home broadband, fiber optics, data center services through its subsidiary Nextra. Mobile money, this is where it gets interesting, Henry. Digital financial services encompasses digital wallets, payments, microloans, merchant services, savings, insurance, international money transfers via its Airtel Money platform, serving over 44 million mobile money customers. I could go on. Enterprise solutions, end-to-end communications for businesses, governments and NGOs, infrastructure, investments into fiber optics and data centers to meet the growing demand. Data centers. You're going to see lots to talk about data centers going forward. So that's the company, Henry. Financial data that came out recently, I think it was the 24th of July, for the year end to March 2025. Total revenue, approximately 4.96 billion, with 21.1% growth on constant currency basis. Operating profit of 1.46 billion. Net customer profit, 328 million, significant turnaround from the prior year loss. From a loss to 328 million increase, Henry. That's a big move. Yeah, data revenue increased by over 30%. Mobile money revenue grew by 30%. Capital expenditure for next year stands at 725 million. This is a company that is on fire, but nobody's interested in it. So yeah, that's it, mate. That's all I've got to say about it. It's growing rapidly in front of our eyes, and none of us are interested in it. CEO is called Sunil Tandar. After the results came out last month, expressed strong satisfaction with the quarter's performance. Yeah, I would too, mate. Highlighting sustained demand, strategic tariff adjustments, initiatives such as Airtel Spam Alert, an AI-powered feature to enhance customers' trust and network safety. And he emphasized the company's focus on digital and financial inclusion across its markets. Accelerating growth in an accelerating market, Henry. I'm not sure what's not to like there. Thoughts on that one, Henry? Or shall I give you some more metrics here?
Yeah, no, a lot to like.
Forecast PE of 18.2%. PEG, interesting here, despite its growth and 82% growth year to date, the PEG is 0.4. 0.4, not even a PEG of 1, Henry. Oh, you get a little dividend of 2.5%. Go on,
my only
you tell me the negatives. Go on.
Is that after having invested in Vodafone for many years, I am sick to death of the telecom sector. And so for me, that's quite an easy one to go. Congratulations to Pat Cat, who I believe still owns this. Certainly,
Pat Cat, yeah.
Spoke about this several years ago. I don't know for sure that he still does. But he plumped for this. I plumped for Vodafone. I got this wrong. And if he's held for as long as I think he has, he's done very well on this with today's share price. So congratulations, Pat.
Yeah, trust me, I know what Pat's like, and he travels all around the world as well. So he's seeing these companies, firsthand as to what they're doing and the digital payments bit that they're doing and all the rest of it. So he's probably got what do you call it, on the ground knowledge of the company as well. Very shrewd individual, our Pat. And Pat's already said he's going to be at the Investor Summit on the 13th, so we'll get to have a drink with him. But also, just imagine if we can get Smudge Dan, Pat Cat, we could have a little corral of our own and go, come on, guys, share some of
Well,
the
we learn
insights.
from the real pros. We'll just be at the back getting drunk.
Well, the beauty of it is, folks, we're going to have a whole, I think we've got about 30 or 40 people who are listeners that I know of already that are confirmed that they're definitely going to be there. So we're going to have our own little section of the bar afterwards, or maybe even meet up at lunchtime and have our 3-course lunch when we have the midday lunch thing and have a chat about it. Right. So Henry, I want to just finish with a little 2 things really, just to reiterate to everybody that Henry and I are going to be at the Investor Summit, but that's not the reason why you're going there, folks. No. We're going to be talking about how basically to find stocks that can navigate any markets. So you're looking for something that you can hold regardless of the volatility of the markets for 3 years, 5 years, 10 years. And the peaks and the troughs of the market, you can add to it, so on and so forth. And eventually you will have a significant compounding or compounder of success regarding that particular stocks. I've mentioned that today, I think, was that I put the post out regarding Henry and I being live at the Investor Summit. And when Henry and I did the Master Investor Show on the 29th of March, Henry and I concluded that the stock that we were going to pick as our number 1 pick after all of our analysis regarding the segment we did was Babcock. And if you put that particular share up now, Henry, on the 29th of March, which was the Saturday, so use the date before that, the 28th of March, which is the Friday, that stock is up 40% plus, excluding dividends, since we picked that stock out. Yeah. So can we do it again? You may want to come to the show to find out. And what would that 40% increase mean to one stock in your portfolio? That's a 1% holding. That's valued at 5k or 10k. All I'm saying, folks. Right, Henry. The Investor Summit, mate. I need to just share with you this. I need to share with you guys one of the panel sessions that's going on here. It's an amazing particular panel that's going on. Henry's seeing this in development, and I've got various conversations with Henry about this of late. I took the picture of it. I took a picture of it somewhere because I couldn't get the details up. Have I got it? Yeah, here we go. Right. What do Henry do on this pod? What do we focus on mainly? Financial education, folks. Right. And there is a panel session that's being led by a brilliant individual by the name of Danny Wallace. And Danny Wallace is part of what is called the Private Investors Network that's up and down the country. And they've got various different segments of it all around the country. And eventually they all meet up as a group as well and cascade and share and basically activists to try and make investing better for all retail investors and investors per se. But Danny has put together, I've helped him a little bit with this panel. He has got this panel which is covering financial education, and the title is "What Will It Take to Make Britain Financially Literate?" And on this panel, he's got the consultant city editor for the Mail on Sunday, the individual that writes some significant articles regarding investing, what's going on in the markets, what needs to be changed, what needs to be improved. Patrick Tooher, Tooher. Look up for the Mail on Sunday, and invariably each Mail on Sunday, Patrick's got an article or a big spread talking about and writing about something else. Got a former individual that used to be at Panmure Gordon, now running his own platform. The platform's called Agora. The individual and founder is Tom Biltcliffe. He'll be on the panel. Robert Martin, who's the chief executive of the MENPHYS charity, who wants to talk about all things investing and what needs to be done to make access and inclusivity regarding disabled children and families and charities and so on and so forth. So his background is one of working with the economics and the labour economy sort of financial groups that goes on. He's part of that sort of think tank, Henry. And then you've got a chap called Andy Lang, Group Managing Director of none other than, he spelt it wrong, but I'll forget Andy, forgive you, Andy. Money Group, MUNN Group, up there in Lancashire. He's going to be on the panel. But the piece de resistance, and on top of all those other four, is now a panel with 5 individuals. There's 6 on the stage. All we need is drums and guitar for these people right now, mate, and we'll have a band, right? We've got Kevin Moore. Kevin Moore is the Executive Director, Membership and Business Development of the Chartered Institute for Securities and Investment, the CISI. Yeah. On the panel. What more can you ask for, Henry? You know? So the event overall is a CISI registered event. You can see it on the website. So any of the professionals that are listening, if you are coming to the event, make sure you register yourself and you'll be able to pick up CPD professional points for attending this event. There you go, Henry. What do you think of that, mate?
Wonderful stuff, Peter. Wonderful. I genuinely, I am so excited to be attending this. It's in a bit over a week and a day.
Yeah.
And I honestly, I think this is one of the most valuable events for private investors, really. 13th of August, it's going to be a one-day gathering designed for retail investors by retail investors. It's a chance to step away from the screens, meet like-minded people, and hear from some of these wonderful, thoughtful, intelligent voices in the UK investing community. We've got fund managers, there's company CEOs, there's professional investors, there's us two as well, recording a special live episode of the podcast with audience participation. We may just drag a couple of you up and get you to do the episode, and we'll go and take a seat at the bar. No, actually, I'll scare you all off if I say that. But, all of us that are speaking at this thing, it's about sharing the lessons that we've learned in the markets, talking through the themes in the London Stock Exchange, small caps, portfolio strategy, how the world of investing is changing, but also hearing from members of you as the audience as well about what you're seeing. You get the opportunity to ask questions. Come and find us at the bar, meet us in the audience, grab us for a coffee, come and ask, find out. It's not about sales pitches. It's not me and Peter standing up here going, oh, yeah, go and buy ShareScope or go and buy a subscription to the FT. None of that, right? It's real investors building real portfolios and having real conversations. And that is why ultimately I am so proud to be a part of this with Peter. And you get all of this for just £89 for a ticket, which frankly is remarkable value when you consider
84, mate, £84
84
or 18. Well, unless it's gone up now because the early bird stuff has gone. But yeah, it's cheap as chips, mate. And in that is all the food, all the drinks, and the bar later on as well.
Well, you've got the speakers, you've got the networking, you get the food. I mean, I tell you what, even the coffee's good, because when I went to go for coffee, I tried some of the coffee. I wasn't just drinking Nuki Brown, and it was very, very good. So, whether you're a long-time listener to the show, whether you're a newcomer and this is your first episode, whether you're just interested in sharpening your investing edge, come and join us. Buy a ticket, treat yourself, have a day out, come and see us. And if you do come and see us, come and say hello, because I'd love to meet you in person. Don't be strangers. So get over to investorsummit.co.uk, get your tickets booked, and we're going to love seeing you there on Wednesday the 13th.
Absolutely. And one of the things that I've been getting a lot of DMs about, somebody was asking me, are the people talking about tax and inheritance tax, are they regulated professionals? Yes, they're all regulated professionals. They can actually give you in-depth analysis of what your circumstances are, because they're saying and have said the likelihood is that somebody who comes and sorts out their IHT could be saving tens of thousands of pounds just by having that sort of little snippet about that particular issue that they're not quite sure about how to go ahead and deal with. And if that happens, mate, I just want to be hearing from people coming back to us saying, you know what, we attended the Investor Summit in 2025, and this is what we saved. So who have we got? We've got Stephen Yu, Blue Whale Growth. Yeah, Blue Whale Growth Fund are the platinum sponsors of the event. We've got the absolutely amazing Henry Loves this lady to bits, as do I. Annabelle Brodie-Smith, the communications director of the AIC. Simon French doing a keynote speech, chief economist and head of research at Panmure Liberum, always on Bloomberg, always on CNN, always in the papers. Fantastic individual. Charles Hall, head of research at Peel Hunt. He'll be doing a end of day keynote speech. Will Fenner, London Stock Exchange, retail broker. Broking bit is what she's in charge of. Digital Wealth Lead as well. Nick Brind of Polar Capital Global Financials Trust. Alistair Unwin, Polar Capital Technology Trust. Jeremy Skillington of Poolbeg Pharma. Jack Kelly of European Green Transition. Cathal Frail, serial entrepreneur. The brilliant Laura Fall of Law Debentures, portfolio manager there. And who can forget Justin Urquhart Stewart? He's back. I'm hoping he's going to wear his red braces, Henry, so we can take some pictures with him. Got the fantastic John Stepek, senior reporter and author from Bloomberg. Brilliant Micah Curry, investment and pension expert. Multi-award winning Moira O'Neill. First ISA millionaire, Lord John Lee. Robert Crawford, co-fund manager of CQS Natural Resources Growth and Income Fund. Fernando Valda, chief investment officer at Energize Africa. Already mentioned Tom Biltcliffe. Sarah Content, portfolio design specialist. How do you design your portfolio? How do you make sure you balance your assets? What do you do about diversification? Malvi Varja, chartered financial planner. It's one of the specialists looking at your portfolio there and the tax and the implications regarding it. Head of corporate services. We don't get that title without knowing your stuff, do you, Henry? Joe Winkley of Winterflood Securities. Mentioned already Robert Martin of MENPHYS. Got a cybersecurity expert as well, Anthony Dalton. Mentioned Danny Wallace already. Blink Rothenberg just celebrated their 80th birthday, or incorporation as a business. Tax, accountancy, inheritance tax. Massive, massive company, this one. Nimesh Shah is going to be there representing that company. Lindsay Cook, financial author and broadcaster, is going to be there. Sue Nofka, head of UK equities at Schroders, portfolio manager. Again, depth of knowledge. Then you've got Nick Brisbane. I can't go through all this list. I'll be here all day. But you just look through, go and visit the website, have a look at the schedule, have a look at the people on the panel, and the quality of individuals there. Head of retirement, Ellen Morrissey. You know, got some significant individuals here. I think we've got some people that own Orit, which is Octopus Renewables Infrastructure. We've got the co-fund manager there, David Bird. Yeah, so you'll be able to ask him direct questions as to what's going on. Who else should we mention? Oh, we've got a brilliant Reg Hoare of MHP Group. MHP do a lot of work. James Deal, co-chief executive officer of Retail Book. We've got a few Retail Book individuals there as well coming. The list goes on. What can I say? Hopefully see you all. Come and give Henry and I a tap on the shoulders. Let's take a group photograph. Let's, as a group, have a fantastic time. Celebrate the world of investing and the knowledge and share our insights. And invariably, folks, learn more, improve more, care more. And as individuals, try and not only pay it forward, but try and encourage other people to not give up with the volatility of the markets, but actually look and think, this is just but one stock that's done me wrong or has not worked out for me. The rest of my portfolio is still intact. Like Henry just said earlier, it was a 1% of his portfolio. That was all, 1%. So therefore, you move on, you look, think about the other stocks that were 1% of your portfolio when you first bought it, and are now 2% of your portfolio or 3% of your portfolio. That's offset that one stock that hasn't done so well for you. And that's the way you balance it out. Look at your portfolio. If you've held it for 5 years, what did you start with? What have you added to the portfolio since then? But what is the overall value increase for it versus that one stock that's I've woken up to or you've woken up to that's gone? And you're going, what have they done now? You know, it's one stock. Yeah. And as Roger Federer would say, he's only ever won 50% of his points. Yeah. And what did he become? The GOAT of tennis. Yeah, correct. Right. I think that's enough for me, Nasser and Henry. Anything else you want to add, mate?
just thanks for another great episode. Thanks to everybody that's tuned in.
Have you just lost your voice, by the way?
No.
Okay. I didn't hear what you said.
No. Just thank you to everybody that's tuned in, that stayed with us. Thank you for another great episode. I am so excited to see as many of you as possible on the 13th of August. Please do come along. Make sure you come and say hello. If you are coming, you can find me on Twitter. You can find me on LinkedIn. Ping me a message. Let me know you're going to be there. We're on the stage at, I think it's 9:45, I want to say, 10:15. We're early anyway. So anyway, Peter is also up. So he's up in the morning with me. Then I get the afternoon gallivanting around causing chaos. Peter is then on the stage again in the afternoon with the wonderful Stephen Yu at Blue Whale Capital. So let's all go sit on the front row, cheer. Let's get some little face masks with Peter on and scare him to death. And anyway, thank you for tuning in. I'm looking forward to seeing as many of you as possible there on the 13th. And take care wherever you are in the world.
Thank you ever so much for that reminder of me doing a fireside chat with Stephen Yu. I'm a little bit like that at the moment because it's going to be my first live in front of audience, sit down and just to go for it. You know what I mean? So it's going to be very interesting. He's a lovely guy there.
Don't worry, I'll be there throwing tomatoes. So
yeah, thanks for that.
I'll be there with a bottle of Nuki Brown, getting drunk on the front row.
Right, folks, thank you ever so much for listening. If you've enjoyed this pod, please share a comment on LinkedIn, on Twitter X, or any other platform that you want to share it with. Give us a little plug, give us a little retweet, subscribe on YouTube, please, and let us know what your thoughts are. And invariably, if you're there next Wednesday, please come and say hello. We'd love to see you at the brewery in London. Go and get your tickets at www.investorsummit.co.uk. And until then, which will be, what would date be? 21st of August will be the next time you'll get another pod from us. Take care. Enjoy the summer sunshine, or hopefully we'll get a few more weeks of it. And just take care of each other and show kindness, compassion and care to those that you love and those that you don't even know. Just show some kindness. Ladies and gents, take care. God bless you all. Bye-bye for now.
Twin Petes Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.